Hey there, this is Jacob Wood with Douglas Elliman Real Estate, and I have for you here the Q4 2022 market report from Douglas Elliman and Miller Samuel. Now, ever since the Fed more than doubled the benchmark interest rate mid last year, buyers have adopted a wait and see approach as to how prices were likely to react. We saw a 30% decrease in activity year over year in Q4. So those buyers who sat out the market over the past several months waiting to see what prices were going to do have their answer. We see from last quarter, median resale sales price was up 1.5% year over year, down 0.5% for the quarter, essentially flat. So as activity contracted 30%, prices did absolutely nothing. So what's up with that? What's up with that? What's up with that? Sorry, I couldn't help myself. But seriously, why hasn't the contraction in activity been followed by a correction in pricing? After all, pricing is trailing data. Perhaps we'll see a correction in pricing later on in the year. I'm skeptical of that for several reasons. One, over the year and a half post-pandemic, we saw activity increase 45%. 2021 was a banner year for real estate sales in New York City. We saw around 14,000 homes purchased that year. During the course of that same time span, prices rose 5.3%. Now, the long-term average annual value appreciation in New York City is 4%. At 5.3% over a year and a half, the price increase was just in line with the long-term average. Prices didn't react to the 45% increase in activity at all. How can we expect them to react as that activity simply returns to its pre-pandemic level? The second reason I expect prices to hold steady through the course of the next year is because while it is common for a price correction to be preceded by the sort of activity contraction we've seen, it's more common that a price correction is preceded by an increase in supply. So what is our supply doing? In 2019, we saw around 6,000 homes for sale at any given time. 2021, 6,200. Now there's around 6,500 homes for sale. While that's somewhat of a supply increase, supply is actually down from Q4 to Q3. Q3 was still a very active quarter, and we were seeing about 67 homes for sale at any given time during those 3 months. And so we just haven't seen the sort of supply increase that it would take to move the needle on pricing. But if 30% fewer people bought homes last quarter, what happened to all the homes they didn't buy? Shouldn't we still see them on the market in the form of increased supply? Well, we have to remember that a lot of those homeowners refinanced their loans in 2021 to 3.25. They're going to be loath to trade in those low interest rates now for a new loan on a new home at 5.25. They would have to see lower prices on homes, which, as we've discussed, they're just not seeing. And so that's a supply issue that we are likely to have to deal with in our market for years to come. So if it's not going to be the carrot of lower interest rates that compels people to list their homes, what about the stick of any looming recession? After all, we've seen price cuts across the tech sector in the headlines for the last few months. But we have to remember, a lot of those tech companies are multiples bigger than they were pre-pandemic. Even as they cut 20% of their workforce, which isn't uncommon, they are still much higher than their pre-pandemic employment levels. And so that is not the sort of widespread white-collar job loss that we would need to seriously assume any sort of recession was on the horizon. We also see that the Federal Reserve, in its own subtle way, is beginning to signal that they've done most of the interest rate increases they are likely to do. And we also see that inflation is beginning to relax from its highs last year. And so a lot of the economic experts are beginning to predict a softer landing as opposed to an actual recession. So, let's say you're considering purchasing a condo in Brooklyn or listing your co-op on the Upper West Side for sale, and you'd like information on how that specific submarket is performing. Let's talk more. This is Jacob Wood with Douglas Elliman Real Estate.